Morning, everybody. Welcome to the start of another week. Positive week on the markets, as we all know. A lot of data, a lot of news out. Morning. Hi, Neil. Steve. Nice to have you all back again. Bright and breezy on this, well, start of the week. Decent weekend. Yeah. So what happened last week? Well, I think the sort of complete reverse from what happened the previous week, really. I remember this time last week we were talking about FTSE having been down, the Dow, gold sort of mixed and crude down. Well, really, we've seen a bit of a reversal, haven't we? FTSE was up. Let's have a quick look. FTSE was up about 130 points, that's it, just to remind myself. Obviously, this morning, not looking so rosy, but I'll come on to that in a second. We've got gold unchanged on the week last week. Crude did bounce back following the sort of rather negative news following the US Energy Department's announcement about production. But the crude was still down $2.30, so particularly weak. US crude, 88.73 at the moment, so that really has come spinning off. Euro, yeah, well, you'd expect the euro to have recovered last week. I think we're up at about 1 3/4 cents. Have a quick look. I know we're having to look at e-signal data for now, but just looking at the euro, yeah, we're up about 1 3/4 cents against the dollar. Cable didn't have a particularly good week. I don't know if you who are trading sterling crosses, euro sterling. I'm just going to put up this chart here. If we look at the 240 minute, I think it'll become quite clear. Top right, for those of you who are struggling to see where we're at, top right is euro sterling. Let me just refresh it. Yeah, so quite a pullback. Quite a pullback in sterling, quite a recovery in the euro. So we've from this time last week, from the 1st of October, we've really rallied a good 110, 120 points there. So sterling very much weak on the crosses, and the euro the main beneficiary. So what happened last week? Let's have a quick look at our calendar, just for a sort of brief review before getting on to what's happening this week. Let's go to Trendsignal. Just click on the free trading tools, please. So if you just click on the free trading tools, and you'll notice the economic calendar here, which you can launch. So this is the calendar. The markets are not looking too good at all this morning. I know Adrian's probably showed you. If we just quickly click on the FTSE, which is not updating, which is not hugely useful. We'll put up our Ensign data. You can see, e-signal data. You can see that the market has opened sharply lower and has actually fallen further. We were due about 25 to 28 lower on the FTSE. We're currently 46 points lower at the moment. And as a result, also with the risk-off trade, remember we've mentioned that before, risk-off, currencies are subsiding a little bit against the US dollar. So you can see euro, that's the middle one here, 129.72. So that's pulling back a little bit. In fact, euro on the crosses as well, so you can see it against euro sterling. It's starting to drift back as well. So a little bit of risk off. And well, let's see the reasons why this is happening. Let's go to our calendar for this week. So we were looking at last week's calendar. Just to go to this week, we'll click on the week starting, well, the 7th. It's really the 8th, isn't it? So this is the calendar for this week. One thing I would say is if you're a bit sort of overwhelmed by all these numbers that are coming out during the week, and I can understand that it must be a little bit confusing when I'm flitting from one day to the next and seem to focus on just a few bits of data. But actually what we're doing is we're trying to focus on the more important bits. What you can do, if you go to the left-hand side here, I don't know whether you can see where my cursor is, under Options in the left-hand column, you can go to Event Filter. Now what you can do here, having clicked Event Filter, are you all seeing this, team? Someone say hi. I feel like I'm talking to myself. I'm sure I'm not. Yeah, we got life there. Good. Okay. So if you see here, you can actually deselect the ones that are less important. Just deselect the low impact one. Let's focus on the high and medium impact one. We might as well get all the currencies. It will remove a few of these less important bits of data out. I'd keep the non-economic ones in because it's quite useful just to know what's going on there. And then just click Apply Filter. And lo and behold, it becomes a less crowded calendar. So we now have something that is a little more easier to digest. I'll go through it sort of per day just so you can see where we're at. Monday, there isn't a lot of data out this week at all. Having had all those interest rate decisions, I didn't mention interest rate decisions for last week, that nothing happened on that last Thursday, if you recall, from the ECB and the MPC. A lot of data out last week, not so much data out this week, unfortunately. We do have Mr. Draghi speaking. The reason why I'm mentioning Mr. Draghi, because last time he spoke, all sorts of things happened. He tends to sort of play with the markets a little bit, so it's something the markets have got a little more used to now. So 8:30, well, early tomorrow morning, Mario Draghi, the president of the European Central Bank, the ECB, will be talking. If you want the detail, just click on this here now. And this is testifying before the Committee on the Economic and Monetary Affairs of the European Parliament, to the European Parliament. That's like, Ben Bernanke does his testimony to Congress. Sometimes you do get some surprises, so please be aware if you're up and in positions at early doors tomorrow, you could see a few fireworks, but just make sure you're aware of that. There's not a lot actually out on Wednesday. Some fairly low-key stuff. There's not much point. That's the Swiss National Bank Chairman Jordan speaking. That's not something that necessarily affects us. If you're trading the Swiss, we don't tend to trade the Swiss too much, to be honest. So if you are trading a Swiss or any of the Swiss crosses, then be careful there. But otherwise, we really have to jump to Thursday. So as you can see, not a lot going on, really. Aussie unemployment, if any of you are up in the middle of the night, that's something that has the potential to move the markets. Obviously, the Aussie is under a little bit pressure of late, having suffered the interest rate cut last week, which was, as I say, was a bit of a surprise. Personally speaking, I can't understand why it's so strong, but I think that's one of the reasons why it's stuck in this quite a wide, volatile range. But you'd think what's going on in China would suggest that the Aussie will be falling back further. But let's wait and see. Other than that, we have the US trade balance on Thursday. That's an important number. That comes out at 130. So pretty much 42 billion in July. Analysts expect the deficit to widen further to 44.2. It's expected to widen more significantly in light of the global slowdown. Okay, so less U.S. exports, and that's obviously something that is affecting the U.S. market. So a further expansion of expected to 43.9 from 42. Then we have the weekly unemployment claims at 130. The usual story, unchanged there, nothing too dramatic. Then we have on Thursday at 6 o'clock, I think we've got the federal budget. This is something that's going to become more important. We've got this fiscal cliff approaching post the election in the new year, and the federal budget deficit increased. The deficit increased by 191 billion in August, which beat expectations for 160 billion deficit. This is due to sort of adjustments, etc. But the end of the US fiscal year is getting closer, and the deficit is now more than $1 trillion, making it the fourth consecutive year that the deficit has crossed this $1 trillion mark. Just massive numbers, I know, but for the time being, the US, as I say, is still one of the brighter stars out there. Finally, we have on Friday the University of Michigan consumer sentiment. Sentiment numbers are important. They're a good leading indicator, and sentiment has been reasonably positive. This is the University of Michigan Consumer Sentiment Index final reading for September. actually, no, sorry, that is 78.3. That was the final reading of September. So this is the prelim number, and they are suggesting that consumer sentiment has slipped, or just a very small decline to 77.9. Now, that's all the data that's out. Other stuff that is happening this week as well is we've got the G7 meeting, and that is on Thursday. This is an all-day meeting in Tokyo. The G7, that's the top 7 industrialized nations. This is something that's not normally, it's a closed session. They don't have the press at these meetings, but there's a lot of leakage. A lot of the ministers attending this G7 meeting, and this is actually happening in Tokyo. But there is a possibility that you can get someone talking out of turn that could surprise the markets, but it's nothing that we can plan for. But just be aware of that, please. Now, why was the market so depressed overnight or this morning? Well, one of the reasons is we've had some fairly dire or bearish news. Let's go see if I can find it. I think it might be in the global economy. There we go. The economic recovery on the ropes. And the reason why I wanted to mention this is that, I've often mentioned that, the austerity measures that have been carried out by a lot of governments to get their borrowings in check, certainly in the UK, and certainly in the peripheral zone countries who are trying to ensure that the markets don't beat them up too much and that they can borrow monies to support their economies. The picture hasn't looked good. There's been a lot of measures by central banks to support their economies by engaging in further rounds of quantitative easing. We've got the OMT in the Eurozone, further QE measures in the States, and less recently in the UK. And the reasons being that these economies are not doing well at all. And this article here, Economic Recovery on the Ropes, it comes from this Brookings Institution, which is a US-based sort of a private non-profit and independent research organization. And they've got this thing called the Tracking Indices for Global Economic Recovery, called the TIGER. And it shows that the world's recovery to be on the ropes. And I'm not surprised, really, because we talked last week about, the dire state of the Indian economy and the slowdown in the Chinese economy. That's sort of close on 38% of the world's population. And so you can see how much things have deteriorated, certainly since the beginning of the year across. This is the group of 20 leading developed and developing economies. And so really, apart from the US, things don't look particularly good. And I think that's one of the reasons why the markets are looking a little bit negative, and the sentiment really in complete contrast to this time last week. But sorry to put a down note on it. For us, it's trading. We're happy to digest anything as long as we know what's going on. People have asked me, what the reason is for it, and, well, there's the answer. So FTSE 47 off, DAX under pressure, CAC under pressure, and bonds higher, which is risk off. Remember, risk off, down, risk on, up. Anyway, that's the summary for the week. Less to digest this week, but do watch out for Draghi talking early tomorrow for all of those who are trading any euro crosses. And that's it. Thanks very much for listening.